Hello, today I'm meeting Benedict, Managing Director at INSEE. We're going to talk about trends in 2017 because Benedict wrote a yearly market analysis. So actually I'm curious, what word you used most in this report?
Definitely bullish. It was another bullish year, so in general markets went up. We had the lowest point in the markets in March, April 2016, and then in 2016 for the rest of the year we saw increasing markets. In the first 6 months of 2017 the markets were flat and going down a little bit in some cases, but then in the summer it started to increase again to end up for most markets higher than where it started the year. The winner in the bullishness contest was coal. Coal prices again, there's a very firm uptrend in coal prices, and in 2017 coal prices increased 30%, and obviously that had an impact as well on electricity markets in those markets where there's a lot of coal-fired power stations that need to buy coal in the world markets like Germany, Slovakia, Czech Republic is also an example of that. Gas prices, actually, they ended at more or less the same price level as where they started the year. So in the first half of the year we saw gas markets come down from the bullishness we had seen in 2016, but then in the summer they also started to increase a bit in line with the oil prices, because oil markets obviously were also up with the OPEC production cuts.
And what was the main driving force of this bullishness?
Demand. Demand for energy. Of course, we just had, the year is just finished, so at this moment it's very hard to get your hand on reliable data regarding the real demand figures. But all the reports you read are talking about increases in demand. The world economy is performing really good, and this causes, for example, Asian demand in China to go up rapidly. The economy is performing well, so it's not just in Asia. So we had again those messages in the market about pressure on markets because of high Chinese demand all through the year, and definitely in the second part of the year this was very obvious. We had some other factors also influencing the market, like for example the situation with the nuclear power stations, notably in France, where a lot of them were closed down due to the continuing security issues, and obviously that then had a particular impact on those markets. And then there was weather. In the south of Europe we've had a dry year, like here in Spain for example. We've had some rain now recently, so it's going to be interesting to see how this will impact the situation for the hydropower stations, where the water levels were very low in the south of Europe, which caused hydroelectricity to be scarce, and that obviously also impacted the market.
So for the next months, what fundamental trends are you seeing there?
Yeah, well, one trend that was very particular, and I wrote a blog article on this in 2017, was that we saw spark spreads getting close to dark spread and even become a little bit better. Now, that's a bit of Chinese I'm talking here now. What are we talking about? Spark spread is the money you make when you use gas, and you use gas to produce a megawatt hour of electricity. So it's actually the amount of money you make when you are producing electricity with gas. Dark spread is the same thing, but for coal. Now what we saw was that in the downtrend from 2011 to 2016, the dark spread was much better than the spark spread. Meaning basically that coal prices were falling more rapidly than gas prices, which made it very profitable to produce a lot of electricity with coal. In 2017 this trend has reversed. So because of the coal price increasing more rapidly than the gas price, we are seeing now that the gas-fired power production starts to be really competitive compared to the coal-fired power production. That's interesting because obviously it impacts individual countries, like for example in 2017 Netherlands or UK, which are countries with a high amount of gas-fired power production, they were not rising as fast as more coal-fired power production countries like Germany. But it's going to be interesting to see what happens if this trend continues, because then the fundamentals for the electricity production change, and also it will have an impact on the gas market itself. The main driver for gas demand has been the fact already that more power is being produced with gas. So spark spread versus dark spread, definitely something to keep a very good look on. In itself, the gas import, we saw some interesting increases. It looks a bit like Gazprom in the last weeks is doing like a promotion campaign to try to convince us that we are becoming very dependent on Russian gas. If we look indeed, we saw that pipeline imports increased by 4.14%. So, and that's mostly gas from Russia. So yes, they did have a nice year. On the other hand, and that's interesting, LNG imports in Europe in 2017 went up by 15.34%. So we are seeing that despite everything Gazprom is trying to say, the diversification of supply thanks to LNG is continuing. And very interestingly, we saw in 2017 33 ships coming with gas from the US. And they went pretty far. One of them went all the way to Lithuania, so really in the backyard of the Russians. And that's 33 ships compared to just 6 in 2016, on a total of, I think, 960 ships that came our way with LNG. So the gas supply situation is not looking bad, and those trends in the LNG market are, again, interesting to follow up on to see how they impact our markets.
Wow, I can see that we need to keep an eye on everything of that. Let's see what next month brings to us, and stay tuned. We're going to talk about all the interesting topics. See you then.